What's the impact going to be on the industry you cover?
Thank you for having me, and Happy New Year. So we do think that Omicron could have at least a modest short-term impact on the space. That should come from a combination of some airline employees being forced to go through 5-day quarantines when they get infected. And we could see some impact on demand. And at this juncture, we think it's going to be primarily managed business travel as the main piece that's affected.
Yeah. Judging from the stocks at this point, it doesn't appear that investors are overly concerned. But you bring up business travel, and it's a topic that we've discussed quite often when it comes to airlines for the last year and a half. What is a normal business outlook at this point in terms of travel for, let's call it 2022 versus what it once was back in old 2019?
Certainly. So if one thinks about business travel on a normal cycle pre-pandemic basis, that was roughly 15% of the big three passenger volumes and roughly 50%, according to our estimates, of pre-pandemic passenger revenue. Now we think as we move through 2022 and even into 2023, we're not going to be back to pre-pandemic managed business travel levels. We think we'll be maybe 60 some odd percent there by the end of this year, maybe 80 some odd percent there by the end of next year, with possibly some long-term structural impairment on that piece. Not to say that there won't be any managed business travel, but maybe the individual who took 5 trips in 2019 might take 4 trips in 2023 and 2024. So that piece of the space still looks more vulnerable than leisure and visiting friends and relatives travel.
We've talked a bit about labor inflation and the impact on the carriers. I wonder how long it'll be before we start talking about energy once again. And then as a follow-on to that, how much cushion do the majors have to be opportunistic and try to move into parts of the route structure that maybe they see, underserved?
Sure, certainly. So the labor piece of the pie is not going to go away. We have inflation going up. We have, in some cases, some of the airlines trying to make heads or tails as to what the proper staffing level is going to be for this year. And some of that is coming from not having enough staff. Some of that's coming from a lot of overtime being done by some of their employees. So there could be salary pressure from all of that, and that's something that we think is at least partially baked into the cake at this point. When we speak about jet fuel and oil prices at this juncture, we're taking a somewhat more constructive view on that. Maybe 2 months ago, there was a lot more talk about oil prices going to $100 a barrel. The crude oil futures curve remains in backwardation, and we've seen some relief since that time. So not as immediate a concern per se. In terms of the U.S. majors potentially moving into kind of new areas, I mean, they've already done a lot of that. I think at this juncture, the market is waiting to see more normalization of the transatlantic corridor, where we would expect, for example, some of that wide-body capacity that's been going into places like Florida to get redeployed onto some of these international routes, which is really where that metal is best suited. So, that's how we think this is going to play out over the next several months.